Thank you, Senator. Senator Thune.
Thank you, Mr. Chairman. Thank you, Mr. Secretary, for coming today. And I appreciate your statements about support for tax reform. I think everybody here wants to get on with that issue and hopefully do something that will lower rates and broaden the base. But I'm still waiting for the White House to put forward a proposal on that. I think that it's been said here earlier, but I think the proposals in the budget this year actually sort of take us backwards when it comes to the issue of tax reform. You got all kinds of new tax rates coming in. The proposed Buffett rule, raising dividend and cap gains tax rates. It strikes me, at least, that if we're serious about tax reform, that the administration ought to put forward a plan that would actually accomplish tax reform that would allow us to move forward. Now, there is one thing that I did want to ask you about, and that has to do with the proposal that qualified dividends be taxed at the same low rate as capital gains. That was in last year's budget. And in fact, last year, I think the 2012 budget word for word, the quote was something to the effect that taxing qualified dividends at the same low rate as capital gains for all taxpayers reduces the tax bias against equity investment and promotes a more efficient allocation of capital, end quote. The budget this year, however, proposes to tax dividends as ordinary income, which, if you have your way, will be top rate of 39.6%. So if you include the new 3.8% surtax included in the health reform, that means the top rate on dividends would be over 43% before we even consider that the income was already taxed at a 35% rate at the corporate level. The question, isn't it true that such a high tax burden on dividends is actually going to promote an inefficient allocation of capital?
I don't think so, but Senator, I would say that one way to think about this is it helps explain why ultimately we need tax reform. As I said earlier, what we've done is to say, if you try to do a balanced deficit reduction plan and do that with a mix of spending and tax reforms, and you're raising revenue on top of the current tax system, then you have to embrace a mix of things like what we proposed. But it's a good reason to think about why it's good to do this for tax reform. And again, we expect we're going to have an opportunity to work with you on tax reform, particularly given the looming expiry of the Bush tax cuts at the end of this year. I think that the reason why we propose this in the budget is just for the crude reality that we face unsustainable deficits, and we are proposing those changes in the tax treatment of dividend income for the top 2% of Americans. Again, just for the top 2% of Americans, we're proposing those because we're also proposing very substantial cuts in defense, in non-defense discretionary, in Medicare, Medicaid, and other mandatory programs. And to balance that out and make sure there's a bit more shared sacrifice in this context, we felt in order to achieve a more sustainable deficit, we had to find some initial revenue. And again, this is a very limited proposal, affects only 2% of it, top 2% of tax-paying Americans. And we think they can handle it, the economy can afford it. But you're right to point out the better way to get to a more sensible tax system as part of deficit reduction plan overall is through a comprehensive tax reform process.
Well, and are you going to propose a tax reform plan at some point? Because when this was done last time in 1986, there was a proposal put forward by that time the Reagan administration to reform the tax code, and it was the starting point. Congress picked that up, worked from it, came up with the two-rate structure that we ended up with, at least for a while. And we all say we're going to do this, but the clock's ticking, and if we punt this down the road to the next Congress, who knows what the excuse will be next year for not moving forward with this? I mean, is there something that that's going to be forthcoming?
I agree with you, and I said this earlier. Better sooner than later. Can't defer it indefinitely, and even if we didn't have the incentive of the expiry of the tax cuts at the end of this year, it'd be a good thing to try and get moving on now. But as you know, we spent a substantial amount of time this summer working in particular with the House Republican leadership on how to set out broad parameters for tax reform. And as you know, we were unsuccessful in that effort. And we feel like, frankly, we need to see a clearer recognition on the Republican side. You'd be willing to consider tax reform to raise revenues as part of a balanced deficit reduction plan before we think there's going to be the basis for a more serious negotiation. And it's because of what we tried this summer that we've decided to do some more foundation laying for tax reform rather than putting out a comprehensive tax reform plan now.
The tax rates when they go up at the end of the year, if that happens, hopefully it won't, But what does that do to economic growth?
Well, as I said earlier today, and one of your colleagues said this, if you were to allow all the Bush tax cuts to expire and the sequester to hit, that'd be a very damaging, adverse blow to the economy. Of course, no one's proposing that, and we're proposing to extend the Bush tax cuts that go to 98% of Americans, only to let expire those that affect only the top 2% of Americans. We're proposing to limit deductions for those Americans, too. Those are pretty modest in terms of their impact on the economy. And it's because of that concern for the middle class and for the overall economy that we're not proposing to allow to expire what we call the middle class tax cuts.
The same discussion was held 2 years ago. And at that time, I think the administration concluded that raising taxes on people above $200,000 would be harmful to the economy.
That's not quite.
And that's why the extension was made at the time. We're facing the same circumstances now.
Yeah. Well, we may, but let's go. That's a very good point, and thank you for asking that question this way. As you know, at that point, our view was we should protect the vast bulk of Americans, 98% of Americans, from any increase in their tax burden. But we could afford, and the prudent thing was to allow the tax cuts for the top 2% to expire. Now, as you know, your side of the aisle would not support that. You were not willing to allow the tax cuts for the top 2% to expire. And the only way we were able to prevent a tax increase on 98% of Americans was to agree temporarily with the position you took. But the economy absolutely could have absorbed the impact of letting the tax cuts for the top 2% expire. It would have been a very, very modest change. And even then, with growth as modest as it is, we could have afforded the impact then.
I would just, in closing, Mr. Chairman, I see my time's expired, point out, however, that 4 out of 5 people who pay at that higher rate above the $200,000 income threshold are small business owners. I mean, the people who have business and they have flow-through income, they are people who create jobs. And I think that was a calculation that was made not only by those of us in Congress, but also by the administration when the decision was made 2 years ago to extend all the rates. We
should probably agree to a moratorium on this debate because we do it every time I'm in this room over and over and over again. And you say small businesses, and we say 2 to 3%. You acknowledge 2 to 3%. We say it's only 2 to 3%. But in any case, we can allow the independent arbiters to judge the impact on small business, but there is no credible argument that exists to suggest that those tax proposals we're making would affect more than that very, very small fraction of small business. And as you know, a large number of those firms you call small businesses are lawyers in law firms, partners in hedge funds, private equity. But we've had this debate many times, and we probably should agree to...
There are probably a lot of people up here who wouldn't mind taxing lawyers. I'm just kidding. But, no, I mean, I do think, though, that there is a very... You can argue that it's 2 to 3%, but it is also the people who do own the businesses and the people who are creating the jobs. And right now, it strikes me at least that we want to have policies that encourage job creation and economic growth. And I think it would be counterproductive to raise taxes on the people who are creating the jobs.
Again, we share that general objective with you, and the only disagreement we have is that we do not believe there is a feasible way or a fair way to restore fiscal sustainability without asking a very small fraction of the most fortunate Americans to bear a modestly higher burden for the privilege of being Americans. And the only reason we propose that is because the alternative to that, since we can't go out and borrow $1.5 trillion to afford continuing those tax cuts, is to cut deeply into defense spending, Medicare benefits, programs for the poor, or investments in education and infrastructure. If we thought there was a way to avoid that, we join you in embracing that, but we just don't think the basic fiscal realities of the country give us an alternative to that.
And reforming entitlement programs might be a solution to that.
And we're willing to, we're going to take a different approach to you on that, as you know, but again, I remind you, the President's budget proposes $350 billion, roughly, of savings from Medicare and Medicaid over the budget window.
Out of providers.
No, substantially out of providers, but not only out of providers.
Mostly.
And again, not to compare or go back to history, but you could ask your staff to make the following comparison to you. Can I just make one more point, which is compare the level of savings from Medicare, since you guys want to be for courage on entitlements, in the president's budget over the next 10 years to those in the Republican alternative from last fall. Now last spring, whatever you want to say it, we are proposing tough, difficult reforms on Medicare and Medicaid in the hundreds of billion dollars of range, alongside these other cuts across government. And we think to go significantly deeper than that would be unfair to middle-class retirees.
Thank you, Mr. Secretary, very much. I think Mr. Hatch has a follow-up